News Channel 5 network, this is MorningLine with Nick Beres.
Good morning, everyone. Thanks for joining us on MorningLine on this Tuesday. Nick Beres here. Hope you had, if you had an extra day off this last holiday weekend, a good time. And maybe you're sleeping off still the downer of the Titans losing. What the heck? All right, they lost, but it was a great year, and they'll be back next year. But we're moving on now. All right, so we're here now in January, and gosh, it's just, a blink of an eye. And April 15th will be here. Yes, I'm sorry, I said it. Taxes. Now, for some of you who are maybe expecting to get a refund, this is something you anticipate and are eagerly looking forward to. For others who have to pay, you're going to put it off as long as you can. But it's time to talk taxes, at least to start prepping and get in the right place that you need to be to get it going. So we're going to talk about it this morning with none other than one of the foremost tax experts, not just in this city, not just in the state, but in the entire country.
Wow, I am expanding as I hit, not just in size.
Dr. Friday, good morning to you. It's
Hi.
nice to see you.
You too.
She really is very good, and I've learned a great deal from her, and it's nice that we have you come on at these pivotal times during the year, all right? And is this a pivotal time, the start of a new year?
Definitely. Well, today's a big day because today e-file is being accepted. So you have the ability to start sending physically where the IRS will accept your tax return, and that means refunds will be following. They always tell us within 21 days, but I see it seems like 7 to 14 days. People will start getting their refunds back into their bank accounts if they use e-file and direct deposit.
So, meaning if you start right now with e-file, and today is the then
they'll accept,
you could get a refund within 2 weeks.
Yes. I usually tell you 21 days, so don't. But I have found the experience. Yes.
I mean, do you find that there are people that do anticipate and budget for refunds?
Absolutely, absolutely. And I mean, there's a whole industry, auto industry, used car industry. They gear up for the refunds because a lot of people use that money to
down
buy
payment on a car or something.
Whatever. Yeah. So definitely a big time for people that are. And there's a lot of free filings. I know I make a living filing tax returns, but you know what? The important part of this whole thing is filing your tax return. The IRS has put numerous things out there talking about under the Secure Act. Now, jump around a little bit. In December of 2019, get my years all right, they passed a thing called the Secure Act. It's mainly about retirement, but in there they always sneak in tax law in the weirdest places as far as I'm concerned. You could pass, I don't know, a road bill, and in there could be an additional tax thing in there, right? In this one, they passed the new law that basically said that if failure to file, right now you're looking at basically a minimum of $300, maximum of 50%. They've doubled it. It's $400 or a maximum of 100% of what you owe. So if you owe money and you don't file your taxes on time, your penalty could physically be what you owed in the first place. You owe $5,000, you wait until December of the next year to file those taxes, it's now $10,000. And that's without failure to pay proper estimates, without paying the failure to pay penalty and all these. This is just one penalty. So they're really pushing, guys, for people to file the tax return on time, and they also there's a lot of free sites, especially for seniors or single people with a lower middle income tax places, where you can actually go right onto the irs.gov website, click on taxes. There's a free filing site for most people that make less than $69,000.
Okay, and I'm glad you mentioned that because people do need your services, especially maybe that have more complex, there's dual incomes in a household and other types of exemptions, all this. But if someone just is real basic and they just have their own one tax form, they can do it themselves. And be careful too. I don't know if they're scam artists or whatever, but there are places out there that will say, you pay us, and they just guide you to a free site. You know what I'm talking about?
Yes, yeah. You want to make sure, and this is perfect for individuals that have W-2s only. You got a W-2, or maybe you're a senior and you have 1099-R from like a pension or an IRA, and your Social Security statement. These are easy, and I will tell you, there's a brand new form for seniors. It's called the 1040-SR, and what's great about it is the text is bigger for all of us that keep getting our glasses glasses, you know, or getting bigger monitors. On my desk, the monitors keep getting larger and larger, so I can, you know, and then, and it also already has tax code for everyone over the age of 65 because they have a larger personal exemption, a larger standard deduction, things like that. It's already got it built in. So just again, and if you go to the free site, you'll have that option. Click on 1040 SR. If you're over the age of 65, it'll just make it faster for you.
Just hit on this since you did mention Social Security. We have a lot of seniors that I know watch in the morning as well, and most of you I know all this, but they're going to say, all right, so do I have to file if all I'm receiving, if my only income is Social Security right now?
It's a great question, and the answer is no. The tricky part of that is, let's say you're married and you only get Social Security, but your spouse is still working, and you've always filed together. Now is your Social Security taxed? And the answer will probably be yes, unless they're making less than $17,000 or thereabouts. So that's the time you might want to think married filing separately. The spouse that's working may file a tax return. The spouse that is not working may not file at all. There is advantages and disadvantages to all these. So you want to talk to somebody, get that personal advice, because your situation is going to be different than the next person and the next person. But there are ways of not paying tax. But if you are solely living off Social Security, or even Social Security, and maybe you get a pension of $500 a month.
I was going to say that. Or what if you're drawing on a 401k?
Right. So as long as if you're single and you're drawing less than $12,000, then you're going to still be able to have zero tax. So it wouldn't be a problem. If you're single and you have Social Security and you're drawing $20,000 and you're now in a taxable situation and you want to pay taxes.
Is there any reason, even though you don't have to file? If you know what I mean, just so you're on the record or that you do this, that maybe in the future, would there be any reason for someone in that scenario to go ahead and file just for the heck of it?
Under the current tax law, the answer is no. But I will tell you that if you are a senior and maybe you have money in a 401k or an IRA, if you're retired, it's probably been converted to an IRA, and maybe you're not drawing because you're not old enough where you have to. Well, if you're only living off Social Security, you could convert $12,000 a year free into a Roth IRA. And I'm not a financial planner, but there are tax planning, so reasons you might want to look into taking it from an IRA to a Roth, zero tax, putting it in the Roth and let it grow tax-free, and do that for a few years. That would put you some money in an extra account that you got free money. You didn't pay tax going in, and you're not paying taxes going out. It's a pretty sweet deal.
All right. We covered some of that. Phone number on the screen, 737-7587. If you have questions, just before we take our first break, throw out there some of the issues that you're going to run into, some that maybe our viewers might have questions about. And I know you see all types of different clients, but is there something that's going to jump out at you that you always see every year around this time?
Well, I would say first, make sure your forms are correct. So you're going to be getting W-2s, 1099-Rs, Social Security statements. Look at them. Make sure, especially on 1099-Rs, there's a box 7. It's going to have a code in it. It's going to say code 4 if it's death benefits, code 1 if it's early withdrawal, code 7 if it's standard. In that code, I can't tell you how many times, is often incorrect. Now, if you've been receiving the same benefits from year to year, it's probably fine. But if it's your first year, sometimes that could be incorrect. Even checking your W-2s. We've ran into a couple situations where the information didn't match the year-end pay stubs. What's the difference? Now, sometimes there are explanations, sometimes not. But look at your forms before you just throw the numbers into a tax return. You might be surprised.
All right. And we talked about people getting refunds early. Folks that want to put it off because they know they're going to pay.
I do it. Let's be honest. Okay, I do pay my quarterlies, but I don't always know exactly what I'm going to have to pay.
Talk about quarterlies, how important that is. If you forget to do the quarterlies, then it hits you in the face at the end.
Right, because there's two things. One, the law is you have to make 4 equal payments based on the year before. And a lot of people say, well, my taxes are different every year. How can I do that, right? Well, they don't care. If you owed $20,000 in 2019, your 4 estimates in 2020 are going to be $5,000 each time, to total $4,000, even if your income isn't high enough. The tax law does say if you pay in enough, well, that's fine. The fourth quarter one doesn't necessarily have to, but how do you know if you're paying in enough until you do your taxes sometimes? So you have the second thing you want to do, and you can do this today. You can file an extension. If you're an individual that basically says, I'm not going to be ready by April 15th, file your extensions. Remember, corporations and LLCs and partnerships are all due March 15th, and then individuals are due April 15th. File extensions. That gives you until September or October time to get your documentation and not rushing in to your tax person who's sometimes a little crazy during the next couple months because it's hard to get. So business owners, a lot of them will put it off till May or June so they can get more of that one-on-one attention that you might want or need to do what you have to do. So getting your tax documents together is the number one. And remember, they don't have to have them to you until January 31st, in the mail, I should say. They have to have them in the mail by the 31st. And they are now allowed to electronically send them to you. So if you've got a mailbox or an email, check it because you may have already received your W-2s.
But if you don't receive them by the 31st, you might want to inquire with your employer and
they basically say you have to wait till February 15th.
Okay.
They give them 15 days, but yes.
No, but then check. If you don't have it, say, all right, wait a second, maybe you sent it to my old address by accident.
That is what happens 99% of the time. I had one client, we have over 1,000 employees, 72 changes already on addresses. People, contact them today. If you've moved since you've worked at that job, go ahead and contact them and make sure they sent it to the right address because most likely they did not update it.
And real quick, as we go to the break, if you do ask for an extension, as you just said, that's not like, oh, we'll just take an extension, no problem. You are going to have to pay interest during that time of the extension. It will cost you a little more.
Extensions do not delay money at all. So failure to pay, failure to make proper estimates, those penalties are going to, the only thing that's going to save you is failure to file, which is the largest one.
Penalty.
But it will stop you on that penalty. Otherwise, it only delays the paperwork. Keep in mind, you still have to make those payments. So if you think you're avoiding it, all you are is adding to it with additional penalties.
So if you can, meet the deadline. All right, we'll take a break on that note. When we come back, a lot more to talk about, along with the dreaded audit. Oh my gosh. The number is 737-7587. If you're sitting at home and have a tax question about what you're putting together, some type of income you're not sure is taxable or not, this woman has the answer. So we'll take a break. If you'd like to join us, give us a call. We'll be back with more right after this.